IC Weather Center.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for tuning in to us here. 4 o'clock hour, we're getting to get stretch run. If you're a 9 to 5er, you've got an hour to go yet. Don't slack off yet. You're getting paid for this hour. Make sure that you get a sprint through the finish line. But we can see the end in sight here. So I appreciate so much that you're tuning in here to Dollars and Cents, presented by North Main Financial, as we give attention to, and perhaps and will even spark some conversation regarding items of economic and financial importance. Now, you know, as a previous listener to this show, we're talking on a lot of things, and we do that intentionally. And we're going to be all over the place. We talk about some fun stuff, some anecdotal stuff, and we also talk about some pretty serious stuff that's happening around us. And sometimes as we're doing that, we're talking on specific investments, maybe management companies, maybe publicly traded entities of one shape, size, variety, or another. But you remember, as a previous listener to Dollars and Cents, that nothing that we're talking about here is intended as a specific recommendation for you. Meaning that even as we're talking about these things, everybody's situation is unique. Everybody has their own particular financial journey and their own financial space. So we strongly, strongly recommend that you reach out to your tax advisor, to your financial advisor, or if you'd like to reach out to us at North Main Financial, love to hear from you. Love to chat about your particular financial situation and to see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, main like the street, financial.com. Northmainfinancial.com. We have a contact page on there. Leave us an email address, a phone number. Let us know the most preferred and desirable ways for us to contact you, again, at northmainfinancial.com. But if you'd like to get in touch with us during the show here, love to hear from you. Call in 844-STUDIO-4. That's 844-788-3464. 844-788-3464. I know we live in a text world now. I get that. You actually do got to dial. Well, you don't. Nobody dials numbers anymore. Do we even have phones, Producer Bill? That have a rotary. You may not even know or have ever experienced the rotary dial.
I am somewhat familiar with the rotary.
You've seen pictures,
but Studio 4, yeah, no, that would be too tough.
That would, because you'd really have to pay attention on there. So, all right. So we're not dialing here, but you definitely do have to press the impressioned digits on your flat screen, as you're calling it, 844-788-3464. If you'd like to call into the studio here, as we're talking about here on Dollars and Cents, all items economic and financial. All right, hot headlines. This is our first segment. We've pivoted a little bit. We've structured things a little bit differently here on Dollars and Cents, focusing on some things that we think might be known to you, might not be known to you, but certainly they're the kinds of headlines that we're seeing on our end of things at North Main Financial, or we're hearing about from clients. So let's go ahead and dive into it. The hot headlines in terms of what we're seeing here. One that's not so good, and meaning that this isn't the kind of news that we'd necessarily like to be able to talk about, but it is a fact of life when we talk about how businesses and entities cycle. Rite Aid drugstores, probably very familiar to you. You may even use one in going to a Rite Aid for your prescriptions or for other needs. Rite Aid declared Chapter 11 bankruptcy this past week. And the reason why we're mentioning that, obviously, is because Rite Aid is very well known and is certainly prolific throughout the country in terms of their locations. About 100 stores, it looks like, are going to be closing down. I don't think all at once, and I don't think that necessarily it's going to be something that happens even in the immediate term, but it's going to be happening. And so you're going to see some stores start to close. You're going to see some stores reformatted in terms of what they offer. That's part of going through the bankruptcy filing process. They did secure financing, meaning Rite Aid did secure some financing to restructure in bankruptcy. So it'll be interesting to see how they come out on the other side. Probably should do a little bit of background on Rite Aid, just relative to their financial situation. This isn't a complete surprise, at least not to us at North Main Financial. They've been in a pretty tough space financially for an extended period of time now. And so this was not a complete surprise, certainly not in the same kind of financial strength that, say, a CVS Caremark is, or Walgreen Boots Alliance is both very strong in terms of their financial position. Rite Aid's been in a tough space, and they also have a collection of lawsuits still pending against them with regards to the opioid epidemic. So again, not wanting to get into the legal aspect of things there, but they did declare Chapter 11 bankruptcy, going through a restructuring. So if you shop at Rite Aid or you have your prescriptions at Rite Aid, you may just want to check in with them to make sure that that they're going to continue to be offering them at your particular location, and if not, to take a look at what the other options may be. All right, now we're going to get into something fun here, and it's fun because I love to eat. I really do. And I know on Good Morning LKN, which, by the way, if you haven't turned in Good Morning LKN, Monday to Friday, 7 to 9, the Chief, Justin, producer Bill, they do a great job. Tune in here, 105.9 FM, 100.7 FM, all the socials, 7 to 9 in the morning. They do a great job. But I know they like to eat too. So I don't mind talking about food so much because I know they like to eat too. But big news from Taco Bell. Now, producer Bill, I don't know if you saw this news. I don't know if you are a consumer of anything Taco Bell. I tend to like it periodically in my well, let's say not very sophisticated palate to consume it. So are you a Taco Bell person?
I have to do the mental gymnastics to tell myself I'm not a Taco Bell person, but yes, I am very much a taco. I'm a Taco Bill.
You're a Taco Bill. See, I do. I love. I mean, it's the kind of thing. It's usually the right place at the right time. Anyhow, Taco Bell, part of publicly traded entity Yum Brands. I mean, what a name for a company, Yum. I mean, if you're going to own KFC and Pizza Hut and Taco Bell, I think it's appropriate that you call yourself Yum as an entity. So publicly traded, and again, not a recommendation to buy, to sell, or to hold Yum brand stock, but Taco Bell specifically saw on the headlines this past week, they're introducing a double steak grilled cheese burrito. Now, that just sounds like a lot of goodness to me, at least insofar as all things Taco Bell are concerned. Double steak grilled cheese burrito.
Whoa.
I mean, I love all of those things.
Why, yes.
I love double.
Yes.
I love steak.
Yeah.
I love grilled. I love cheese, and I love
Right.
burrito.
It's sad that you had me a double.
Because now I'm just thinking that's a lot of steak, or a lot of grilled cheese. Anyhow, so if you are one who enjoys the delicacies at Taco Bell like I do, like producer Bill does, you may want to take a look for the double steak grilled cheese burrito. Say that 5 times fast. All right. So again, as we're looking at what's happening around hot headlines, kinds of things, we're in earnings season right now. And I'm going to start on this, and then we're going to hear from our sponsors here in a couple of minutes, and I'm going to keep going on it. But I want to talk about it. When we say earnings season in terms of headlines and what's hot, every quarter, publicly traded companies report their earnings. So every 90 days approximately, we hear from publicly traded companies. They're on differing schedules, meaning not everybody is on the same either calendar year quarter. They may be in fiscal year quarter. So yes, they are coming and going constantly in terms of their quarterly reports, but generally speaking, they're bunched up. And so that's why we call this earnings season. We're pretty much in the middle of it right now, of where things are right now. But we got 2 big ones that are out there. And just an interesting thing before we go to break here, just an interesting thing for you to kind of keep in mind, because we're seeing a pretty interesting dichotomy in the market. Netflix. I mean, who doesn't know Netflix at this point? I think it's almost as ubiquitous as, say, Coca-Cola at this point. Netflix came out with some surprisingly strong numbers. It was very interesting to see. And then we got Tesla, which the electric cars, Elon Musk out there. Not so great in terms of their quarterly report for several different reasons. So it's interesting to see, and we're going to be talking about this here in the second quarter of our show here on Dollars and Cents. But we're going to be talking about more about what we're seeing in the markets, and that's going to be in the fourth quarter as well. Little teaser, I want you to hang around. But for right now, we're going to hear from our sponsors. You're listening to Dollars and Cents, presented by North Main Financial here on WSIC.
More of Dollars and Cents with certified financial planner Joshua Dobi on the way from the new 105.9 100.7 WSIC.
Here is your WSIC community calendar. Want to enjoy a night of magic? Eric Jones, a worldwide award-winning magician, is coming to King Center for the Arts Saturday, October 28th. Buy your tickets before they sell out. canearts.org. Eric Jones, the magician, Saturday, October 28th. canearts.org. Carolina Balloon Fest is this weekend. Day passes to watch the event start at $15. Want to take off in a hot air balloon from Statesville? You can book your ride today. For more info, including ride pricing, visit CarolinaBalloonFest.com. The Carolina Balloon Fest, this weekend near Statesville Regional Airport. CarolinaBalloonFest.com. Pumpkin picking at Kerrigan Farms. Experience the pumpkin patch at Kerrigan Farms by booking your experience now at KerriganFarms.com. KerriganFarms.com for a pumpkin picking adventure. Santa is coming to town. Schedule your time to take pictures of Santa at Birkdale Village. Spots are limited and must be scheduled in advance. Santa will be at Birkdale between November 19th and Christmas Eve. Appointments include time with Santa and 8 digital images from a professional photographer. For more info and to schedule your time with Santa, visit BirkdaleVillage.com. Have an event you'd like to tell people about? Yard sales, estate sales, and everything in between? Visit WSICnews.com and click on Events to submit your event today.
The Renaissance Festival is back Saturdays and Sundays now through November 19th. Save your dates. Don't miss the Renaissance Festival. Tickets available online only at renfestinfo.com while supplies last.
And now for a look at your weather forecast from the WSIC Weather Center. As you head through your morning, those clouds will start to roll in. We're looking at a mostly cloudy afternoon with your high temperature getting up near 69 degrees. Into the evening, clouds will stick around, but that overnight low won't be as bad, only getting down to 51 degrees. This has been your weather forecast from the WSIC Weather Center.
Hello, everyone. This is Joshua Dobi from North Main Financial Group. We're blessed at North Main Financial Group that most of our clients come to us by referral. When folks have a good experience with us, they share that good experience with their friends, family, and colleagues. In doing so, when we're sitting with folks, then we're looking at their financial plan and seeing if it aligns with their goals and their desires for what yet lies ahead, be it college, be it retirement, or be it estate planning. If that sounds of interest to you, we'd love to hear from you. Reach out to us at northmainfinancial.com.
Dollars and Cents continues now. Here's your host, Certified Financial Planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us into the second quarter. Your football reference, if you listen to about 10 minutes of any of our Dollars and Cents shows here, you know when it's football season, we're going to reference football. And Producer Bill, I think looking at the glass half full for our beloved Carolina Panthers, I think it's good we get a little break this week.
Yeah, it'll be nice to kind of step away, regather.
Yeah.
The first couple drives down in Miami, though,
I mean,
I thought about you. I'm not going to lie.
I mean, I'm watching and I'm getting excited. I mean, right. I'm looking at it. We get 2 quick scores. I'm thinking, okay, you know, the dam's going to break here. I
was already like, we're back.
We're back.
We're back.
I mean, we just 180.
Right.
And well, that was a little foolish on my part to get that excited about it because things did not stay in that particular direction.
What is it? Revert to the mean?
We have established a new mean, and it's a mean mean.
It is a mean
in this season. I'm not going to talk about the record because we are perfect, but not in the ways that we want to be. And so we're going to be looking at opportunities. I don't think I can say it's early anymore. I think we're beyond. Is it? Or can I say it's early until we get to the halfway point? Is that okay?
Yeah,
okay.
Let's keep that going.
Okay. All right. So it's early. All right. It's early in terms of the season yet. So we're going to catch a break this week. We're going to come back next week and we're going to be ready. We're going to be refreshed and ready to go. So I'm excited on it. All right. A little bit of football there. There's probably not going to be the last time I talk about football here on Dollars and Cents. Appreciate so much though you hanging with us into the second quarter. All right. As we were going to break there, we were talking about earnings season. Right. So in talking about headline kinds of things, the hot headlines that we're seeing out there, like I said, I don't know that anybody is unfamiliar with Netflix. And it seems like most folks are familiar with Tesla. And I bring those up, because, yes, they're familiar and probably companies that you've probably heard at some point, perhaps even follow, perhaps even own. It's not a recommendation to buy, sell, or hold any of those, either of those companies. But bringing them out because they both reported earnings here in the last couple of days. And to see the differences in terms of the earnings experience, which is in a sense happening all the time. I mean, it always is, right? I mean, not all companies are doing well, not all companies are doing poorly, and there are a whole bunch of companies that are somewhere in the middle of those two things. And we're seeing that here. Netflix came out with, I would say, exceptional numbers. And it was interesting. I was reading through a little bit of the text of the earnings call. So I wasn't on the call, but I read through some of the text of the earnings call. One of the primary reasons why Netflix came out with such good numbers, and I am chuckling here, is because they're cracking down on folks who share the access code for Netflix, which apparently there is a way. Producer Bill, I'm sure you don't know this, so that's why I'm not asking you, because we're on the straight and narrow here at WSIC. But apparently there is a way for you to be able to share your access code, or there was a way, and now they're cracking down on that. So it's not as easy to do that anymore.
Yeah, no, this is all news to me. I've
Okay.
never shared or do
No,
not share.
no.
Definitely not on my parents.
No,
No, no, no.
and definitely not when we're speaking on a recording of any kind.
Correct.
To do that. However, but that was part of the reason, because apparently some of those folks on whom they were cracking down, they got their own subscription. So that was good for the earnings report.
That works.
For
That
for
works.
Netflix. Anyhow, so good on that side of things. And then looking at Tesla, though, some challenges. And I think probably one of the most, let's say, disappointing aspects is with regards to their Cybertruck. I don't know if there's another way to describe it. Their Cybertruck, which has cost a tremendous amount of money in development and production, pushed back in terms of when we can expect it to come to market. And there is a huge demand out there. I've looked at some of the pre-order folks and the pre-order reports about demand and about interest in that kind of thing. I mean, it looks cool. I mean, I don't know. Does it look cool? Am I going to buy one? No, probably not. But
I
mean,
could see myself going up to Taco Bell, getting a double grilled in the Cybertruck.
It is Cybertruck. They wouldn't even hear you though, right? I mean,
Right,
it would be,
exactly.
because you could sneak up there as
Right.
big as it might be, because it's all running electric. But that's a great visual. Actually going into the Taco Bell drive-through with a Cybertruck. Okay, we might have to do that for WSIC here. Once those trucks become available, they're not. That was part of the disappointment. It's one of the reasons why the stock price was down so much there whenever the report was made. So we're seeing those kinds of things, and then I really need to mention as well, for the obvious reasons, especially in this interest rate environment, as we're looking at hot headlines, as we're looking at earnings season, and I have to talk about where the banks are right now. And here in the Charlotte region, of course, there's a hypersensitivity to the banks, because we are arguably the financial capital here in this country, outside of New York City, and I'll say it's very mixed right now. Goldman Sachs came out, terrible numbers. I mean, terrible in terms of what was expected. Terrible numbers. Wells Fargo, very disappointing in terms of what was expected. Interestingly enough, Bank of America looking very strong right now. Now, again, got to provide the caveat. I'm not recommending Bank of America. I'm not recommending that you sell Wells Fargo. It's not that they're bad companies or bad people. Nothing whatsoever. What I'm talking about are the numbers that they have reported and that they are projecting compared to what was expected by the street or by Wall Street. And it's very, very interesting. We're still dealing with the effects of that mess that we had in the first quarter of this year, when we had Silicon Valley Bank get taken over by the FDIC and a couple of other banks as well at that time. And I'm not saying it because of concern about the structural integrity of our banking system, but rather the perception. And it really is a perception issue at this point, because there's just a lot of challenge. Here's another thing anecdotally with regards to where we are interest rate wise. And you may already know this, but it's a little bit counterintuitive to how we think about our own personal spaces. That when you look at banks and when you look at what is beneficial for banks, it may be already evident to you, but I find that it's not evident to everybody that the deposits, that when we make deposits, those are considered liabilities to the bank, because A, they owe you that money. Now B, they also owe you some interest on that money if you're in an account that pays out interest or pays interest for the deposit. So it's actually considered to be a liability, and it's an asset whenever they make a loan. on that. Whereas, we think about our personal situations, it's exactly the opposite, right? If we have the cash ourselves, it's considered an asset. If we have a loan, it's considered to be a liability, exactly in the reverse for the bank. So kind of interesting on that note. So, and what's really happened here over the last, again, sidebar as we're talking about earnings season, but what's really happened a lot here over the last 6 months or so is that deposits, specifically in high yield or higher yielding savings and money market accounts, have gone through the roof, meaning they have increased dramatically. I mean, we're looking every day at the CD, bond, high yield savings markets literally every single day. I mean, it's not that uncommon now to see high yield savings north of 4%, some even north of 5%. CDs, especially on the short end of the curve or with relatively short durations, 5.5, 5.6. I even had one come across my desk that was north of 6% here recently. Short duration, we're talking about 12, 18 month kinds of things, but definitely out there in the marketplace right now. So when we're looking at those kinds of things, opportunistically, I mean, a lot of possibility out there. I mean, we've had more conversations. We've had more conversations at North Main Financial about CDs and high yield money market accounts in the last year than I'm pretty confident that we could say in the last 10 years combined. I mean, it's just amazing. And the reason why we didn't have as many conversations in the most recent history is because rates were so miserable. So our conversations were more like, yep, they're out there, rates are awful. And unless you're just looking for a preservation of capital with no return, there really aren't a whole lot of discussion points. But now we do have discussion points. And I'm thankful for that for our clients. I'm thankful for that for the market. But it's challenging, especially because we continue to be in an inverted yield curve situation. All right, so let's get another headline, hot headline here as we're looking at what's happening in our news and what are the kinds of things that are dotting the headlines from a financial standpoint. I got to talk about this data point that we got here. I believe it was this morning, actually, with regards to home sales. Now, when we're talking about home sales, let's be very specific in terms of what I'm describing here. This is in terms of the actual sale transactions. I'm not talking about new homes being built or the number of new homes being built. I'm also not talking about folks who are necessarily moving. But I am talking about home sale transactions. And the reason why I'm bringing it up here is because we hit, as of the time of the distribution of this data, we hit a 13-year low in terms of home sale transactions. Basically, what that means is we've had the fewest number of home sales here in the last 12 months that we've had in the last 13 years, basically before the Great Recession that we had there in 2008, 2009. So what does that mean? Well, necessarily by itself, it doesn't mean anything. So we don't like to take data points out and keep them out of context. But it does, because of housing being such a huge component of things like CPI and things like personal net worth. When we're looking at us as a country in terms of our fiscal position, it's huge. And it's a very, very big deal. I'll say it from another angle. For many folks, their primary residence is their primary source of wealth on a net worth statement. And so it's a very, very big deal whenever we're looking at that kind of thing. So the number of sales that have taken place, so the number of transactions is at a 13-year low. Now, why might that be the case? Well, any number of reasons why that might be the case. We have higher interest rates. So if you have a low mortgage, if you have a mortgage that has a smaller interest rate, you may not want to take on a mortgage with a larger interest rate, which you'd be required to do in most instances if you would sell your home and buy another home. It could be because there's just less demand right now. I mean, the rental market right now is exceptionally strong in most areas of the country. Perhaps more folks are choosing to rent. That's also a possibility. Are folks concerned about where we are economically? Are houses too expensive in their opinion? All of those factors can be in play there. And that's certainly what we want to keep in mind when we're looking at these kinds of data points, because we don't want to just arbitrarily say, well, it's this one thing or it's another thing. That's never true. You have to take it in context. You have to understand where the overall market is so that we can get a good idea, not only about where we are, but then about where we're going. All right, friends. Well, I'm going to take a deep breath here as we hear from our sponsors. I appreciate you so much for tuning in to Dollars and Cents, presented by North Main Financial. Stick with us as we come back for the second half here on WSIC.
Dollars and Cents with certified financial planner Joshua Dobi will return after this short break on 105.9 100.7 WSIC.
Fall is here, and Little Shavers has the supplies you need. Wheat straw, pine needle, grass seed, pelletized line, landscape edging, and railroad cross ties. Got a deck that needs staining? Little Shavers has PPG paints and stains at prices you can afford. Fall is a great time to replace your furnace filters at Little Shavers. Get the products you need at reasonable prices from Little Shavers, 3301 Salisbury Road in Statesville.
And now for a look at your weather forecast from the WSIC Weather Center. As you head through your morning, those clouds will start to roll in. We're looking at a mostly cloudy afternoon with your high temperature getting up near 69 degrees. Into the evening, clouds will stick around, but that overnight low won't be as bad, only getting down to 51 degrees. This has been your weather forecast from the WSIC Weather Center.
Folks, you know Randy Marion sells vehicles the King of Price way, but did you know our service department? We service vehicles the King of Price way. We sell tires, we sell brakes, we sell batteries, we sell the maintenance. We help you keep your vehicle on the road safe, ready to drive. Whatever the season is, Randy Marion service departments have you covered. Come see us today because, folks, again, you know we sell the King of Price way and we do service the King of Price way.
King of Price, RandyMarionStatesville.com.
Make your work easier with Eagle Rentals of Troutman and Statesville. Eagle Rentals has generators, heaters, fans, painting equipment, floor care equipment, pressure washers, lighting equipment, and lawn care equipment. Plus, Eagle Rentals has construction equipment like forklifts, bobcat loaders, backhoes, excavators, and more. Reserve online at EagleRentals.com. That's EagleRentals.com.
Could you use a little extra money right now? If you'd like to borrow up to $100,000 and get pre-approved in minutes, call the number we'll give you at the end of this commercial. Our lending partners have already loaned millions of dollars to individuals just like you, and we're ready to lend you up to $100,000 if you qualify. Even if your credit is not perfect, you could use the money to pay off high-interest credit cards, for home renovations, or consolidate existing debt. You can get flexible, easy-to-pay terms. The consultation to find out if you qualify is free. To find out if you qualify for our special financing program, call this toll-free number 24 hours a day. 800-215-0703. 800-215-0703. 800-215-0703. That's 800-215-0703. Important terms and conditions apply. Not all applicants will qualify. Loan amount, annual percentage rate, and term will vary depending on creditworthiness. Applying does not guarantee approval. Account approval is subject to verification and confirmation of your credit history and acceptance by a lender. If you choose to apply for a loan through us, a consumer report will be obtained to evaluate your credit.
The NASCAR Cup Series heads to Homestead Miami Speedway this Sunday, October 22nd. Catch all the action right here on your home for NASCAR, WSIC, coverage beginning at 1:30.
Now more of Dollars and Cents with certified financial planner Joshua Dobi on the new 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us into the second half, football reference, second half of this week's show here on Dollars and Cents. Got to let you know how you can call in. If you'd like to call into the show here, can't promise you that I'm going to get it to your particular answer, but I guarantee that I'm going to, I can't say that too often. The compliance folks get real jumpy when I say the word guarantee, but I can guarantee that I'm going to make notes of what you'd like to discuss and make sure that we include it, if not in today's show, certainly in a future show. So give us a buzz here in the studio, 844-STUDIO-4. That's 844-788-3464, 844-788-3464. I was told a long time ago, Producer Bill, that I had to say it 3 times. And that for whatever reason, that if I say it 3 times, that even if somebody's not listening, there's a chance they're going to catch it or at least be sick of hearing me say it.
Right, I like that.
Is that the way that it works?
I like that. That is the rule of 3.
The rule of 3, 844-788-3464. You get 4. You get a bonus 1 there. All right, give us a buzz. If you'd like to talk about something in particular, can't speak into your personal situation, certainly here on the air, but if it's a general topic, I could certainly give you an idea about just some broad parameters to consider there. All right, thinking about thinking about football, I felt like I was negative talking about the Carolina Panthers there in the last segment. So let's talk about something positive. Our Carolina Tar Heels. So going now, pivoting right to college football. Our Carolina Tar Heels. Holy smokes! I mean, impressive. And Drake May, the quarterback, star quarterback for the Tar Heels, that name's probably familiar. We had several of the May brothers who were right here in Huff High School in Cornelius, and
Correct.
I mean, so I do feel a kinship to those guys, even though they have no idea who I am. I still do, right? Because I'm cheering for them and hoping them well. So if you're a Tar Heels fan, it's been a good stretch here, and I hope that continues there. All right, so I had to mention that because I felt like I was being negative on that end of thing. And if you're not a Tar Heel fan, don't call in here and blow up producer Bill. I like all of our. I am one who embraces all of our local teams here. I want them all to do well. So, all right. So let's pivot a little bit. We're talking about our hot headlines there in the previous couple of segments. This segment, and we've started this here in the last couple of weeks, and I think that this is important. We get a lot of feedback on these kinds of things from folks who want us to talk about just some, what for us are pretty common terms or pretty common subjects, but may or may not be for you. And they really are starting out by defining certain terms in the financial world and then how they might be applicable to your experience. Not that you are experiencing it directly, but or specifically rather, but that you may in your own nuanced way, whether it's with your retirement plan or with your own investment portfolio, those good kinds of things. So this is what we're calling What to Know. And we've talked about 401ks, we've talked about Social Security. This week we're just gonna define something, and it's probably something with which you're familiar. And if you're very familiar with it, indulge me for a little bit here as we're talking about it. But we're going to talk about the idea, concept, and what is a mutual fund. Now, a mutual fund may be very familiar to you. If you have a 401k, you have a retirement plan, you may have mutual funds inside of that retirement plan. If you have your own personal investments, you may invest in mutual funds, or you may own mutual funds, or you may have owned mutual funds, or perhaps you inherited mutual funds from someone who passed away. So there are all kinds of possibilities there. Let's start out though by defining what it is. Because interestingly enough, even with folks I know who have had mutual funds for a long time, they really can't define it in terms of what it is. I tend to be a real simple person. You know that. If you've been listening to Dollars and Cents for longer than about 10 minutes, I tend to break things down to a pretty simple and pretty direct kind of way. And I'm going to be doing that and defining what a mutual fund is. A mutual fund, think of it like a bucket. Literally, think of a mutual fund like a bucket. And that bucket can hold all kinds of things. Meaning it can own some stocks, it can own some bonds, it can have some cash, it may own international stocks, it may own large company stocks, it may own small company stocks, it may own U.S. government bonds, it may own corporate bonds, it may own junk bonds, it can own all kinds of things. But think of a mutual fund as a bucket. And different mutual funds have different stuff inside their own buckets, right? Like I said, you got some that are more aggressive in terms of what they own. You got some that are more conservative. You've got some, like I said, that own some bonds, maybe more bonds, or maybe some that own more technology or more aggressive equity kinds of things. You may own some blue chips, meaning those companies that tend to be around for a little bit longer and tend to pay a dividend kind of thing. But that's what a mutual fund is. Now, there are several different kinds of mutual funds. For the most part, most folks, when you say mutual fund, are usually talking about what we call open-end mutual funds, meaning that they do not trade on a minute-by-minute basis, meaning they don't trade on a stock exchange. They usually price one time per day, usually around 6 o'clock or so Eastern, depending upon the particular company, because that's when they have all the pricing done from all of the markets that house the entities or trade the entities that are inside of that particular mutual fund. So it tends to move in that kind of fashion. And there's no limit, generally speaking, within certain parameters. There's no limit on the number of shares that a mutual fund company can issue, meaning that if you want to buy a mutual fund, you don't have to worry about buying it from someone else on an exchange or trading it in a secondary market. So that tends to be open-end mutual funds tend to be the ones that most folks know, even if they don't know that. It tends to be the ones that most folks own. Now, there is another style called a closed-end mutual funds. We got open-end where you can buy them directly from the mutual fund company. Closed-end mutual funds tend to trade a little bit more like stocks, meaning they're still funds, they're still buckets, they still contain certain things inside of them, be they bonds or equities or cash instruments or perhaps even futures contracts or options contracts. They can own any number of different things inside of there, but they can trade, first of all, meaning that you can trade them with other investors on it through an exchange. and they tend to be defined in terms of the number of shares available. So it tends to be more stock-like or individual stock-like when we're talking about a closed-end mutual fund. So we got a mutual fund. It's a bucket, right? We got open-end funds, which, when I say open-end funds, so what would be names that would be familiar to you? Vanguard, Fidelity, American Funds / Capital Group, those kinds. Invesco is another big one that's out there as well. So those are open-end mutual fund companies. The closed-end companies, you probably haven't heard very much of them, and meaning that they're not just nearly as prolific as the open-end mutual companies. So groups like Nuveen, Barclays, that have closed-end funds that are out there. Tend to be MFS also has a number of closed-end funds as well. So when you look at those kinds of things, you look at them relative to the marketplace, that's something that's healthy to know. Because for so many folks, especially when we're talking about retirement accounts, we're talking about 401ks, many 401ks have mutual funds or mutual fund style investments inside of them. And I say this to say what I'm going to say next. It's important to know what you own. And just to say, well, I own, and I'm just making up things now, the Vanguard Growth Fund or the American Funds Washington Mutual Investors Fund. Yeah, that's important. It's important that you have the name on there, which caveat here, not recommending that you buy, sell, or hold any of the funds that we're talking about. But it's important to know what's inside the fund itself, because some funds have a lot of variability that's allowed inside of the fund, meaning that the fund manager or fund managers can move things in a particular direction that may be different from what you anticipate. Sometimes we call that style drift, meaning that sometimes certain mutual funds start out in a certain way, and if another part of the market is, quote, hot or is desirable by one of the managers or the manager, then the fund can move in that direction. You may not even know it outside of understanding what the performance is of that fund. I know it's a little bit arduous. I know it's not the kind of thing that is, what's going to maybe light up the cocktail party whenever you're bringing it up in conversation. But understanding how a mutual fund works is important, especially if you own them. And like I said, for many folks in their 401ks, 403bs, SEP IRAs, either traditional or Roth, there's a fair chance that you do own some mutual funds inside of there. So A, understanding how they're put together, and then B, and this is perhaps the most important point, understanding how they work in terms of what they own. Very, very important. Let me say it this way. There are reports all the time now. It used to be that they would come out one time a year. Of course, that's just showing my age. In terms of the frequency, now you can pull up this data almost daily. You can't, with most open-end funds, know what's happening daily because they have some privacy with regards to the trades that they make. But within 30, 60, definitely 90 days, you can have a good idea about what they're moving at. So you can pull that kind of data. We use Morningstar. Morningstar is a big data analytics service in terms of pulling information on mutual funds to be able to understand where they are and what they've been doing. And they've got ratings on them and all that. I don't tend to pay a whole lot of attention to that kind of thing. I'm much more interested in how funds are managed, what their expenses are, and then, of course, for the obvious reasons, their performance against apples to apples, meaning like-kind funds in their category or their style over an extended period of time. That's what's most important to me. But it's important to know what you own. I mean, it's important to understand about what is it aggressive? Is it more conservative? I mean, this is a good time of the year to be looking at that as well, especially if you've had some success from earlier this year. Now, some of that may have been trimmed a little bit, meaning some of that may have pared back a little bit here over the last couple of months. But when you're looking at it, understanding what a mutual fund is, like I said, think about it like a bucket, and it's helpful to think of it that way. It's a little more simplistic maybe, but it can be helpful to think about it that way. But then, perhaps most importantly, understand what's in it. Understand, does the manager have discretion to be able to move in one direction or another? How would you know if they did? I mean, you got to track them pretty closely. You got to be looking at the reports, or if you're not looking at them, you got to have your advisor take a look at them so that you actually know what you own. Because for most folks, when things are going well, they're not too worried about it. It's when things are going poorly, which, by the way, it's too late after you look at it after things are going poorly. So take a look at it beforehand. This is a good time, like I said, to be doing it. Calendar year in the fourth quarter of the calendar year, this is a good time to be doing that. All right, friends. Well, I'm going to take another quick break here. Catch my breath. Thank you so much for listening to Dollars and Cents here on WSIC News Talk Now.
More of Dollars and Cents with certified financial planner Joshua Dobi is coming up on WSIC.
Here is your WSIC community calendar. Want to enjoy a night of magic? Eric Jones, a worldwide award-winning magician, is coming to King Center for the Arts Saturday, October 28th. Buy your tickets before they sell out. canearts.org. Eric Jones, the magician, Saturday, October 28th. canearts.org. Carolina Balloon Fest is this weekend. Day passes to watch the event start at $15. Want to take off in a hot air balloon from Statesville? You can book your ride today. For more info, including ride pricing, visit carolinaballoonfest.com. The Carolina Balloon Fest this weekend near Statesville Regional Airport. carolinaballoonfest.com. Pumpkin picking at Kerrigan Farms. Experience the pumpkin patch at Kerrigan Farms by booking your experience now at kerriganfarms.com. kerriganfarms.com for a pumpkin picking adventure. Santa is coming to town. Schedule your time to take pictures of Santa at Birkdale Village. Spots are limited and must be scheduled in advance. Santa will be at Birkdale between November 19th and Christmas Eve. Appointments include time with Santa and 8 digital images from a professional photographer. For more info and to schedule your time with Santa, visit birkdalevillage.com. Have an event you'd like to tell people about? Yard sales, estate sales, and everything in between? Visit WSICnews.com and click on events to submit your event today.
The Renaissance Festival is back Saturdays and Sundays now through November 19th. Eat, drink, be merry at the Renaissance Festival. Tickets available online only at renfestinfo.com while supplies last.
And now for a look at your weather forecast from the WSIC Weather Center. As you head through your morning, those clouds will start to roll in. We're looking at a mostly cloudy afternoon with your high temperature getting up near 69 degrees. Into the evening, clouds will stick around, but that overnight low won't be as bad, only getting down to 51 degrees. This has been your weather forecast from the WSIC Weather Center.
Revitalize your landscape with ease. Experience hassle-free transformations with Drum Landscape Supply's swift and reliable delivery service. Visit drumlandscapesupply.com today. Drum Landscape Supply, your local one-stop landscape shop.
It's Dollars and Cents with certified financial planner Joshua Dobi on the new 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much hanging with us. Fourth quarter football reference. It's gonna be another great weekend for football. Our Panthers are taking a break. They're healing up a little bit. They're making sure that they're ready to go for next week, coming off of a bye week. But if you're a college football fan, it's going to be big. Somebody told me, is it Penn State, Ohio State? I know they're not local. Don't get too excited. But Penn State, Ohio State, is that this weekend, Producer Bill?
Gosh, I'm actually not sure. I should know that. I should be on that.
I'm thinking that it's I remember thinking it was Big Ten teams. Anyhow, that they may be playing because that's going to be one of the big games for this weekend. So if you're a Penn State, Ohio State fan, you could probably call in 844-STUDIO-4, 844-788-3464. Let me know. Straighten me out here a little bit. And I'm not forgetting the Michigan fans. I feel like every time I say Ohio State, I got to make sure that I'm not forgetting the Michigan fans as well. I'm not in doing that. But thank you so much for hanging with us into the fourth quarter here. And we're going to be talking markets. So we talked about the hot headlines at the front of the show. We talked about what to know and understanding just what a mutual fund is. And understanding how those things going together. I know you're hanging around for thoughts on the markets. We hear from you folks frequently about that. I want to talk about actually a deal in the market. Well, I shouldn't say it's a deal. I should say that it's been discussed, and certainly there is pursuit by one company to try to buy another one. It has to do with Wyndham Hotels. Wyndham Hotels, which is being pursued by the Choice Hotels Group. This has been going on for a number of months. I want to say at least 6 months, 7, 8 months that I've been seeing this. So Wyndham Hotels probably familiar too. Choice Hotels probably would be familiar too. Comfort Inn, those kinds of entities. Sleep Inn, part of the Choice Hotels group, and Choice has been trying to buy Wyndham, and they just made another larger offer, upwards of combined between stock and cash of $90 a share, just under $8 billion. If it goes through, it's going to be. I mean, that's a very notable deal. You get multiple billions on a deal. That's certainly a very large item that hits my kind of radar screen. But Wyndham just came out. Their board just came out and very flatly rejected it. So just basically for these reasons, we're not going to be accepting it. And it really didn't offer, at least I didn't see, offer up a salvo for a negotiation. It was just basically a flat no. For several different reasons, talking about the debt that would need to be raised and those kinds of things, which is very common in those kinds of scenarios. But Wyndham didn't feel like that was a good pathway to go for their shareholders. So very interesting to see that in the market here. But let's talk about another part of the market that doesn't get. And I'm chuckling because we talk about it a lot at North Main Financial, but it certainly isn't the kind of thing that hits most business news programs all that much. And I'm going to talk about the fairly stodgy, fairly boring end of the investment universe that we know affectionately at North Main Financial as the municipal bond market. Now, I'm not going to get into defining those like we were talking about with mutual funds, so we could do that in another segment, but I really want to talk about where interest rates are in the municipal bond market. Now, as we talked about almost nonstop here for the last 6 months or so, interest rates on most things have increased pretty dramatically as the Federal Reserve has been very intentional about raising the overnight lending rate, which has spilled over, as it was intended to do, into just about everything that has an interest rate associated with it when it comes to debt or liability. And what we have seen, and now talking about the municipal bond market, is a notable uptick or a notable increase in the interest rates that are being offered, and certainly in the secondary market when bonds that have already been issued but are trading in the secondary market between investors, we've seen just a higher demand for interest rates there. Now, what makes municipal bonds desirable? Again, without going too far into the academic weeds, you may already know this, but with municipal bonds, if you happen to own a municipal bond, whether it's a revenue bond or a GO, a general obligation municipal bond, for an entity in the state in which you are primarily domiciled. There you go. I told you I wasn't going to get too academic, and now here we go. No, all right. So let's talk about here in North Carolina. If you buy a North Carolina revenue bond, a revenue municipal bond, or a GO municipal obligation, and you buy it in North Carolina, and you are a North Carolina resident, the interest that is paid on that, meaning the interest that you receive for owning that bond, is tax-free both at a federal and at a state level. Let me say that again. So if you own a bond in the place where you are primary domiciled, I'm using the example North Carolina, you own a North Carolina municipal bond, you are, in most instances, not all, there are those which are taxable. I'm not going to talk about those today, so this is not every single one. But if you own a North Carolina municipal bond, a GO or a revenue municipal bond, then you do not pay income tax at a federal level or a state level on the interest that you receive on those bonds. So that's kind of a that's always been a big deal, right? I mean, that's always been one of the things that has made municipal bonds in your state to be attractive to you. But what makes it even more attractive right now is those rates have increased quite a bit. I mean, we're starting to see municipal bond rates north of 3%, even touching on 4%, completely tax-free. If you do the math and you do what sometimes we internally call a tax equivalency, meaning what would you have to earn on a bond that is taxable to you in order to be equal, if you will, to that tax-free income that you're receiving on the municipal bond, we're bumping into 6% now. 5.5%, 6%, even north of 6% when you factor in some of our higher tax locales. So very, very big deal when we're looking at that. So that's another part of the market right now that is very, very interesting. So talking about the merger and acquisition end of things with Wyndham and Choice, now talking about municipals, very interesting to see how that's matriculating as well, because that's going to continue to be an opportunity for folks to be able to get some yield, be able to do so in a way where if they're buying individual bonds, So long as the entity continues to be financially solvent, you're going to get a return of your principal plus that tax-free interest, again, for bonds that are in the state where you're domiciled. So kind of a big deal. And we're really watching it pretty closely on our end of things. All right, market-wise, I know we're getting to it. Market's down about 7%, 7+%, a little over 7 there. I didn't mean to sing that. That was just me recalling what it had been since August 1st. Since August 1st, down about 7% as measured by the S&P 500 index. And so when we're seeing that, not unexpected. We had a really hot start to the year as measured by our most popular indices. Had to take a breather. Definitely seeing that right now. But what we are a little bit concerned about is what's coming next. As I've talked about several times here on Dollars and Cents, we got federal student loan payments, which are restarting again. That is going to vacuum up billions with a B in terms of cash flow out of our economy. So that's going to be a big deal. What is that going to mean for the consumer? Where are they going to cut back? Because assuming that their income doesn't increase in corresponding ways as those payments restart, what does that mean for the consumer? Where are they going to stop or slow down spending? So we're watching retailers, we're watching the automobile market, we're watching real estate, we're watching what that's going. We're watching the Christmas retail season, which I know, shocker, it's practically here. I mean, I go into some of these retail spaces. We already got Christmas trees up. I mean, can't we just enjoy Halloween? Yeah, I mean, we're still a couple of weeks from Halloween. Can't we just get that first? And then, I mean, we're just hopping over Thanksgiving. I like Thanksgiving. I think Thanksgiving's a great holiday, but it seems like we're at a headlong sprint for the Christmas season. But that being said, we're watching it. What we're really talking about here, we're watching it in terms of consumer spending. Consumer spending, 2/3 to 3/4 of our overall economy, a big deal. It's very very foundational to how we grow as a country. And so we're watching that very closely. And so we got federal student loan payments that are out there. We're watching what that means for the consumer. The higher interest rates. And, you heard me talk here a couple segments ago about the fact that housing sales are at their lowest point in the last 13 years. That in and of itself, that data point in and of itself isn't particularly helpful unless you take it in context, because there are any number of reasons why that's the case. Higher interest rates, folks who have low interest mortgages, lower interest mortgages, don't want to trade it for a higher interest mortgage or can't from a financial affordability standpoint. So when we're looking at that, okay, so what does that mean? What does that housing number, or what do the housing numbers there indicate for where the consumer is, where we are economically, and what's going to come next? It's going to be interesting to see. I mean, we're watching those kinds of things, especially as we're looking at next year being a presidential election year, all that goes along with that. And I'm not saying that there are necessary financial implications from a presidential election year. It just tends to be noisier. It just tends to drown out, or it tends to kind of consume all of the air in the proverbial room, if you will. And so what does that mean? Because there are going to be some bets, assumptions made based upon who's in the Oval Office, even though that person in the Oval Office cannot dictate anything in our stock markets or even legislatively. They can't do that, but it happens every time. See it every single cycle, same thing. Well, if so-and-so gets in the office, it's going to be fill in the blank, either amazingly wonderful or absolutely miserable. Well, that's okay to have that kind of perception. It's not really based in reality, but I mean, there's plenty of that perception out there. I'd be much more concerned about who our representatives are in Congress, and even more so, I'd be much more concerned about who our representatives are in our state, and even beyond that, the most interested, I know this might be counterintuitive, in who the folks are in your town or your city. I mean, we're coming up to municipal elections here in Cornelius, Huntersville, Davidson, here in the next couple of weeks, the first week of November. They probably have more impact over your day-to-day life than any other elected official, literally. I mean, they can impact you. I mean, they're the ones who are making the decisions on the roads, where you are, the schools, where you are. I mean, all of that kind of stuff that affects our day-to-day. So you probably want to pay a little bit of attention to that. And by the way, go vote. Make sure that you go vote. But when we're looking at the markets here, we're looking at what we can anticipate for the year end. We're very cautious at North Main Financial. You could say we're always cautious. Yes, I'm more conservative. I am. I'm a bird in the hand kind of guy first. But we're definitely, I would say, cautious in terms of our expectations. Because we've had such a notable amount of growth here in the front part of the year, but also because of where we are from an economic cycle standpoint. We're starting to see that. We're starting to see some rotation into other parts of the markets that have been largely ignored to this point in the year. But we're still lacking. I mean, if you look at financials, you look at oil and energy, you look at utilities, it's been a miserable year. It really has. I mean, it's not been a pleasant year in terms of performance. So, does that mean that they kind of rotate in and become more desirable as this landscape changes. It may be true. That's certainly one of the things that we're watching. All right, we're rapidly approaching the end of this week's version of Dollars and Cents. Lightning fast recap here. We're talking about where things are market-wise. We're talking about burritos at Taco Bell. You're going to have to tune in the next time. I'm probably going to have something food-wise on that end of things as well. For the markets, for the balance of the year, we're remaining very cautious. Friends, we appreciate so much you tuning into this week's Dollars and Cents. I'm Joshua Dobi. Until the next time, I look forward to talking with you soon.
The new 105.